Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's update our view on euro currency. So in today's weekly report we have tried to cover the really big bulk of the new information. Mostly stands in relation to the adjustment of the European Central Bank policy and how it may impact on the balance of the European Union currency to the United States dollar. Well, using just simple calculation between the possible incoming rate change in Europe and the United States and the closing of the quantitative easing programs that's called as a PEPP in Europe and in the United States, we come to the conclusion that if everything remains mostly the same and both central banks will be consistent with their statement, we suggest that at least 50% to 20% drop of the euro currency to the United States dollar should be returned back. That suggests that approximately, by the end of the year, it's around 116 area seems as a fair price for euro currency because it's a big difference in the euro change, it's a big difference in relation of the quantitative easing in Europe and United States, so we can't say that it will be equal impact on the markets. But based on the steps that Euro Central Bank intends to take, we come to conclusion that all other things remains equal. It might be 2.5 points recovery of the euro currency. But at the same time, we do not know why, but Mediosphere right now ignoring the geopolitical tensions and mostly its impact on actually financial situation in these countries. So actually the results of the geopolitical tensions, which probably will remain in the long term, could have the drastic impact on the domestic economies. So in the case of the United States and NATO, will get the domination over the Russia and could really deny the claims that have been said. That probably will put the big close between and there's really the iron curtain between the Europe and Russia. So that will make the negative impact on European currency just because in terms of the supply of the hydrocarbons, so gas, oil, and so on. So will be initially very bad impact on the European economy, which could give the big advantage of the United States. They will get another advantage in the geopolitical sphere, but in a very short-term period, this could really change the balance in favor of the United States dollar. Conversely, if United States starts losing this struggle, that could trigger the big political and economical events, and it could split or significantly drop the domination of the United States in Europe and raising the domination of Russia and China in Europe and get Europe closer to Asian region, which could turn to disaster in political and financial sphere in the United States. So that also could change the balance. And we think that currently the markets mostly are ruling by the geopolitics in the longer term, not the financial, some financial tools, financial instruments. Well, that's briefly what we discussed in report. Although situation in the long term and on the fundamental background looks complicated, in the technical side, it's more or less simple, at least clear. I could say that everything's clear here. So with the recovery that we have and with the additional analysis on the weekly chart, we could say that some one-leg continuation should follow. Probably it might be even stronger, but at least the overall technical performance that we have here on the weekly chart suggests at least another upward extension. At the same time, we have very long-term downside trend. It has very strong bearish momentum, and this momentum has to be faded. Usually it happens by the more or less moderate pullback, retracement after initial strong signs of the recovery that we have here on euro currency. That makes us think that some retracement here should happen. To keep harmony with this bottom to the left, it should be somewhere to the 1250, 113 area, somewhere in this area, because here we actually suggest that it might be kind of the reverse head and shoulders. Technical tools also suggest the pullback because market stands at a strong confidence resistance and it stands at the overbought. We suggest that still it's really big component of the emotions, this recent rally, just because it was unexpected. But the real things that have been stated by the Christine Lagarde, well, they are not really revolutionary. So yes, they have changed the rhetoric. Currently, we suggest that might be 1-2 rate changes by the end of the year, close and somewhere to the autumn of the 2022. But still, it's not something really drastic. So it's important, it's unexpected, but well, it's not equal to the Fed. Let's call it in this way. That's why to just withdraw some emotional component here, retracement also seems very probable. Still, we're not considering the trading short euro currency as a primary object currently. So we're mostly focused on where retracement might be over and what levels to watch for before taking the long position on the euro. On the 4-hour time frame chart, most probable levels stands around 1250, as I said, and 113. But partially, it might be small retracement to the confluence that we have on the 4-hour time frame chart. So initially, we start our observation for position taking somewhere from the 1337, 1345 area. This will be the first area to consider. Besides here, we could, well, speaking on the patterns that might trigger downward action, well, theoretically, currently it might be the double repo, right? So we have the reversal bar on the top, triggered by the positive non-farm payrolls release. Market also creates an agreement for the resistance. As you can see, well, OP and steep ABCD pattern OP has been reached. So potentially with the all resistance that we have on a daily, it seems logical, at least odds suggest that should be some pullback. Whether to trade euro currency on the bearish side or not, let's everybody decide by himself. So, but if you still would like to and decide to do this, try to get clear bearish reversal pattern on the top. Maybe it will be double repo, maybe the Judd Napoli pattern. Maybe it will be some classical or Gartley's pattern, but something just to let you to minimize the risk. Currently, nothing stands in place yet. So here's some hint on the double repo. We have the first close below 3x3 bearish reversal bar, but it is not in place yet. On lower time frame on the 15-minute chart, what we could talk about treating as a possible hand and shoulders, well, probably it also looks not enough. So it's definitely some difficult to recognize here the clear hand and shoulders pattern. So nothing definite we have yet, especially if you turn to hourly chart. It's difficult to call it as some pattern for trading. That's actually our view currently on the short-term perspective. So if you'd like to go short, try to catch at least some clear bearish pattern before you pull the trigger. That just lets you to save your money if you will be wrong. The market will keep going high a bit with the rest of the momentum that we have. It is really probable, especially in the first two sessions after the weekend. For our purposes on the daily chart trading, we have the bullish context, and that's why mostly in a row with our analysis, we're probably always mostly focused on the high time frames on the daily and 4-hour time frame chart. We will keep an eye on the areas where that's potentially suitable for taking the long position. And as I said, starting from this one, and then gradually turning to this range, maybe somewhere in this area something should be formed. That's our view on the euro currency right now.